All right, so covered call ETFs are very popular. They've gotten less popular over the last, this year basically. But during the 2021 situation, they were incredibly popular, right? And I wanted to talk about what I believe is the best one out there, and that is the CI Energy Giants covered call ETF, ticker symbol NXF.TO. So this is not one that I've barely ever hear talked about, and I think the first reason is that it's a Canadian one, right? It trades on the TSX, so that's probably the main reason. But Americans can still buy this stuff, right? But the reason why I believe this is the best covered call fund is number one, not the dividend, right? The dividend when it comes to this kind of stuff is, again, when it comes to dividends, people need to get the yields out of their head. Again, obviously you want a higher yield. That is absolutely true. But you cannot chase high yields because if the yield is unsustainable, you're asking for trouble. If the stock price or ETF price is going to go down or is going down, you're asking for trouble, right? Because again, if you have a 10% dividend but it's gone down 10%, you're no further ahead, right? Now again, if the market's down 20%, okay, maybe you are. But you have to look at that stuff over time, right? So again, this is one of the problems with the QYLD one, which is the most popular one, right? Is that it's down a lot, right? And the problem with that one is it sells calls right at the money, I believe, is the main problem. I believe it should sell a little bit out of the money. The problem with that is that you would have to set a standard amount without, or you need it to be actively managed, which would mean that, or more actively managed, I guess, because obviously there is some management going on. But the reason why this one is my favorite one are the underlying assets that they're selling calls on, and that is oil and gas companies. Again, if we go to the holdings here, we have Ecopetrol, right? Occidental, Petroleo, I believe is how you pronounce it. That's the big one in Brazil. Equinor, Pioneer Natural Resources, Canadian Natural Resources, ConocoPhillips, EOG, Exxon, Hess. So again, these are I mean, Chevron, I assume, is in there. They just don't look like they're in the top 10. These are the big names when it comes to oil and gas. And again, why do I like this? Because I think oil and gas prices are going to stay high, right? If anything, they're going to go back up, right? I believe that we haven't seen the top in oil and gas prices, right? At least in the especially in the near future, right? 10, 20 years down the road, 10 years, I still think we're going to be high. 20, that's too far out to predict, right? So again, in the near future, there is very little. Obviously, there is a chance because you never know what could happen. But all the leading indicators point to the fact that oil and gas prices are going to stay high, right? Because there is and for the simple reason being is that you could go into more intricate details, but the basics of it is that we have very limited supply, but increasing demand, right? So prices will stay up, right? At least, like I say, barring anything crazy going on. So again, why is this good? Because this is going to benefit from this. Another reason I really like this one is that oil prices are more volatile than the market, right? You do see it's not uncommon to see a 4 or 5% swing in a day, right? If the stock, even if the Nasdaq did that, that would be very high volatility, right? So this fund provides very good buying opportunities, right? In my opinion, if you can get it below $6, that is just an absolute steal. Below like 5.5, that's you're just screaming deal there. But realistically, you're probably gonna have to start picking it up. Let's say, I mean, if we go back 6 months, where I mean, the highs, it got as high as 7.1, it looks like, but again, it has gone below. The lowest it got was about 5.37. We got down to about 5, yeah, about the same again in September. So again, if you can get it below 5.5, to me, it's just an absolute no-brainer. That's a steal of a deal. Below 6, you're still getting good value. Even below 6.2, 6.3, if you don't have any position, I would be comfortable buying more. But again, personally, I'm waiting for it to go below 6, maybe 6.2 roughly, before I would pick up any more. Again, obviously, my opinion on everything here, do your own due diligence and whatnot. But again, This is what good volatility provides. And again, what is the dividend? Again, the dividend is 11.4, right? 11.4. That is a crazy, crazy good dividend. Again, pays quarterly, but not that that really matters. Again, the YLD is usually paid monthly. But again, when it comes to dividends, again, yield is not the most important thing. The most important thing is the ability to continue to pay that dividend, which means you have to look into the underlying holdings. The underlying holdings on this are in an area that is going to stay high, right? So again, I just wanted to talk about this because again, you also have the JEPIs and the DIVOs, those ones that perform better than the YLDs. But again, I think I made a video recently about how I believe index investing is not a good strat, at least not as good of a strategy as people think it is. It's better than doing nothing, or it's better than being, putting money into these stocks that are losing money or grossly overvalued. But I think the problem with these indexes is they're overweight the areas that you don't want to be in, and they're underweight the areas you do want to be in. For example, oil and gas, right? Materials, industrials, right? The things that are in really high demand that we really need, right? Because at the end of the day, do we need a Tesla? No, right? Do we need the latest, software? Not necessarily, right? I mean, yeah, you do need software, but does like I'm just making a point that a lot of these tech stocks, a lot of these consumer discretionary stocks are very, very overvalued still to this day, right? Tesla is a prime example. Tesla, I think, is a solid company, but it's very overvalued, right? Even the Googles and I mean, Meta, I don't know what they're doing, to be honest. Their whole rebranding is turning out to be a massive failure, which I think is pretty predictable. Google, definitely somewhat overvalued. Amazon, you can make the case, but again, over the long run, Google and Amazon are going to do good. Like, does anybody really think that 10 or 20 years from now, Google and Amazon aren't going to at least keep up with the market? But again, Tesla, I don't know. I could see them continuing to absolutely destroy things, or maybe people finally realize that, yeah, this whole electric vehicle, climate stuff is a little bit premature, and they run into some trouble, right? Again, the reason why I like these things is that there is no way around. Again, within the next 10 years, we either continue to use oil and gas, or we massively lower our standard of living, right? And we're already seeing that to a degree. But eventually, I think people need to get tired of it and say, yeah, I would rather be able to get by and risk the whole climate thing going awry 500 years from now than become homeless, or have to live below the poverty line, right? That's something that eventually people are going to realize, and more people are realizing that. And again, when that happens, I think that this is going to continue to benefit, right? And another important thing too is that China's economy is largely shut down, right? So another thing no one's really talking about is that if China reopens, that's going to increase demand for oil and gas, for materials, for a lot of this kind of stuff. And the other problem with that is that when that happens, we might see another bout of inflation, right? We will see another bout of price increases. It's just a matter of how much. And oil and gas are going to be a place, in my opinion, that again, you're not going to get rich off this kind of stuff. This is not something you're going to 10x your money on in the next 10 years. I'm not saying that, but what I am saying is that it's an area where you can make those steady gains, right? 10% a year, right? I think that's probably roughly what you'll get, which again, can you complain about that? Again, you're not going to get rich, but at least you're not going to get destroyed like a lot of people are in a lot of these, high growth, unprofitable companies, or just very frothy companies, right? So anyway, just wanted to make a video about this because this is what I believe is the best covered call ETF out there right now. So if you like the video, hit that like and subscribe, and stay tuned for more.